Hey guys, for more like this, don't forget to hit the subscribe, the like, and the notification bell. Okay, everybody, it's Kevin Wadsworth, Patrick Karim at NorthstarBadcharts.com, and we've got a real legend for you today. I don't think he needs any introduction. It's the man himself. It's Gareth Soloway. Hi, Gareth. How are you doing?
I'm doing really well. Thank you so much. Good to see you guys again.
Yeah. Well, people forgot. Like some people on Twitter say, "Oh, you got to get Gareth back on," and I tell people we had him on the show like just when we started our YouTube channel. So I said, "Yeah, man, it's." I think I reached out, and I think it was time to catch up a little bit there on because I remember the past. I think maybe over a year ago, and there was a beautiful rising apex triangle for the SPX, and you showed us that, and then I don't know if the timing was perfect, but odds are that that thing was ready to topple over. So I'm
Yeah.
happy. That was pretty cool to see that work out.
And it
Yeah,
has worked
thank
out
you.
along with Gareth's Bitcoin calls as well. We're getting very close to Gareth's targets. I'll let Gareth talk about that, but I remember very clearly what he was warning everybody about in cryptos and Bitcoin, and exactly what Gareth said is exactly what has happened. So we need to
Good.
listen to this guy. He knows what he's talking about. You got three chart geeks here. We're all
That's
we're all
right.
in chart geek heaven. So
And I
we'll
think
try
I
and
think
we'll
you
try and
guys
explain it. So
I think you guys you guys are chart guys. So every call that I make, it's all about probabilities, right? So inevitably I'll be wrong on one or two, but it's the goal of making the correct calls on most of them because you're following the charts and the charts are giving you the probable likely outcome.
That's
That's
exactly it.
right.
It's all about the probability. So where do you want to start, guys? Shall we start with the S&P, or do you want to start with cryptos? I'm not sure which
Oh,
charts
you
you've got
you
lined up.
guys, it's your show. You guys tell me.
Okay, well, let's talk about the stock market. That's the big daddy, I suppose, and we'll look at cryptos after that. But the S&P, of course, has been in decline now for many months, and it's broken some key support levels. It's breaking down into the sort of territory. I mean, for me, the initial indications came when the S&P started breaking down versus inflation and versus gold. And now it's breaking. The S&P on its own merit is breaking some key support. So what do you think, and where do you think we're going? What's 2023 got in store?
Yeah, so I'm thinking 2023 is going to be even more volatile than 2022 in terms of downside. You can see here, I mean, here's the S&P or the spider chart, and we have this beautiful trend line, right? I mean, trend lines are just amazing things. You have the all-time high back here. This is in December or January of 2022 right there, and it literally kisses every point here. And what I think was the most important to me recently is we had that CPI number, and the markets gapped above that line. And that was the perfect opportunity for the markets to rip higher. They were above resistance and they couldn't do it, right? So we talk about how failed moves become big moves in the opposite direction. And that's what we've seen here. I mean, since then, it's just been down hard on the S&P 500. So I look at it like, inevitably the Fed will back off on rates. That may give the market a few bounces. But the problem now is that pretty much everyone's very aware that we're going to head into a recession. And the question then becomes, how do we get out of the recession? On a macro basis, if the Fed can't print us out like every, pseudo recession in the last 20 years or 10 years, how does the market get out of it? How does the economy get out of it? And I think that's going to be the big concern for 2023 is, inflation remains, let's say, at 4%. The Fed can't go back to their playbook of low rates and printing money. So for me, down 25% in 2023 is kind of my ballpark number, give or take. But I think it's going to be a wild and nasty year.
Yeah, and this thing around the pivot as well, Gareth. I'm interested to get your thoughts on that, because so many people seem to have this misconception that a pivot is going to save the markets, and you only need to spend a little bit of time looking back at historical examples of when the Fed begins to pivot and start reducing, or the rates start coming back down again, to realize very quickly that is not the case. The market is not saved by a Fed pivot. Would you agree with that?
Yeah, 100%. And you're right. Historically, we can see that in past pivots have actually been very, very negative. Now, it doesn't mean you don't get the relief rally, right? There's that quick short-term
Yeah.
relief rally, but it's usually one of those opportunities to sell into the strength for the next leg lower. And it makes perfect sense too, because, it's a pivot, but you have to keep in mind that inflation number, right? So you were at 9% here in the US. we're probably going to come down to 4 or 5%. But that last 2%, from 4 to 2% on inflation, which is where the Fed wants us back to, I think that's going to be really hard to get to on a macro basis. So it's going to be a situation where the Fed is kind of handcuffed from really stimulating growth as we get into these recessions. And once the market realizes that, that's where it really gets scary for the economy.
Yeah, and it could be many years before stock markets get back to those earlier highs, and even longer, of course, when you adjust it for inflation. I'm not sure what sort of numbers of years you're thinking of, but certainly, many years. What are your thoughts on that?
Yeah, I think you can't say, and you have to think along the lines of the .com bubble in terms of how crazy things got. The Nasdaq took 15 years to get back to those highs, and we could even be looking at a longer period. One of the charts I love to show people is the EWZ, which is it's the Brazilian ETF. And what you can see here is that the Brazilian ETF had this amazing vertical run, which looks very similar to the markets from 2009 in the US to 2022, right? This really vertical move. And if you look at this, the Brazilian market hasn't even broken out of this wedge pattern in the last, now we're talking 2008 to 2022, so about 14 years ago. And so you have to think again that it's very possible that we're going to be in this long-term kind of, it's hard to call it a bear market because I think there'll be bull markets within the bear market, but I don't think we'll make new all-time highs for a long time.
Yeah, it's those cycles, right? There's shorter term cycles within longer term cycles, and I think we just turned the corner of a long term. So that 40-year bull run in U.S. equities, even if it had drawdowns from 2001, 2011, that thing, that 40-year 1980 to 2020, we've turned a corner, and now people have to start looking at probably like the next 40 years, and within that there will be 10-year bear markets, I don't know, 5-year bull markets, but it's going to probably look, it could look like that. But that's the power of the trend line. Like you said, guys, it's so easy chart trading. As long as that upper trend line is not broken above, you just stay clear. It's so easy. That's
right. And by the way, one of my favorite markets to keep an eye on now is the Brazilian market. In fact, that and the Hong Kong market, because to me, it's looking at this chart and recognizing that eventually all markets do break out of their cycles here. And so if you also realize that because the U.S. was doing so much stimulus, it drew a lot of foreign money into the U.S. market. So if the U.S. markets go into this kind of sideways downward move for a long time, money is going to start leaving the U.S. and looking for other areas. And I think, this chart, the Hang Seng market, I think the Hang Seng chart is really interesting as well. Obviously, China does come with a lot of risks, but look at this weekly chart on the Hang Seng. In fact, we'll go to the monthly chart. Same kind of thing. You had this big move up into 2008, and at least you double topped over here, but you could see you still have never broken out in the last 14 years. And so I do think that other markets like this could be of where the money is headed.
That's interesting. You should say that. I was talking to a hedge fund manager a couple of days ago, and he said that they're now becoming very much aware of the fact that stock markets, US stock markets, big tech in particular, are not going to see recoveries anytime soon. They're looking to basically, adjust their investments, adjust their portfolios and clients' portfolios, and they're looking to see where this capital is going. Capital is coming out of the S&P, it's coming out of the Nasdaq, and where's it going? What's and I think he said something along the lines of, if we don't put our funds into those parts of the market that are outperforming, then we lose our jobs. So
right.
That's
right.
That's
they
why
have to stay invested. They have to stay invested somewhere.
You get this sort of snowballing effect, and as more and more money comes out and more fund managers realize what's going on and the gig is up effectively, then that just feeds into itself. So hence the volatility that you were talking about. And on that, where else do you think the funds are likely to go? What are your thoughts on where this rotation is likely to be taking capital?
So if we do see this long period bear market in the US, I think gold is going to be a big recipient, especially if inflation remains sticky just above that 2, 3, 4% range. I do think eventually Bitcoin becomes that. Once the biggest thing with crypto right now is you need that regulation. So you got to get regulation that'll create transparency, which then in turn will make it investable for big money. right? Right now, especially after FTX, too many big money players were injured. They were hurt. They're not going to go near crypto. No one else is going near crypto with big money. Once you get that transparency, you could then argue maybe you can draw some money in as an alternative investment to stocks, more of the digital gold with Bitcoin. But one of the things I wanted to show you guys is just a fascinating chart. This is the S&P 500 chart going back to the mid 90s. And what we could see is this was your .com move up. Then you had your bear market, your financial lead up, your real estate boom, your financial crisis. And then this is the run we saw in the S&P. Now, what's kind of spooky about this is that if we go to the Dow Jones Industrial Average chart, look at this. I'm going to go to this. We're going to flip to the monthly chart. And I want to go back to the 1910-15 range and look at this. So it's very scary how, and this is what I love to do with history, right? I mean, history is the coolest thing ever. But if you look at this pattern, it's the same pattern leading into the roaring 20s, leading into the Great Depression. And again, I'm always hesitant to make some call like that we're going to have that type of event, but you can't deny the similarities in charts, nor can you deny what was going on here. So like if we look at the 1915 to 1920s, what was going on? Well, cars were emerging, so people could start traveling, which means more commerce could go along. You could start shipping things everywhere because you could put them on trucks. You had electricity going into homes, which meant you could have homes and businesses open after dark where that people could be going out to shops and shopping. So it created this consumer kind of buying frenzy, right? Which led into the roaring 20s. And so you had consumer spending. We had loose credit in the 20s as well, which then led us up to obviously the Great Depression, the crash in 29. And then if you look at the S&P 500, what emerged in the late 90s? The internet. All right. And the internet revolutionized shopping as well and consumer spending. Now you can go on Amazon, you can buy everything you want online, you have it shipped right to your home. So it really created this new environment of consumer spending. We know that the lending standards had deteriorated as well. And it's spooky to see those kind of similarities where you had these events that kind of led to these boom periods. But then obviously in the 20s leading into the Great Depression, what happened after? So just little fascinating things like that, I think are worth kind of paying attention to.
Yeah, fractals or analog moves, one of the greatest. That's why chart trading works. I tell people, explain to me why these patterns repeat over and over. Seriously, like when people say it's like astrology for men, we're not studying stars. We're studying actual human beings. This is psychology, right. Human psychology over and over again. Exuberance and then deception and then that sucks. And then that's the consolidation period. And then when everybody forgets about it, boom, you got a boom. It's like, so yeah.
Yeah, kind of crazy stuff. But
I mean, the charts are really the heartbeat of the markets. And, as Pat says, the investor psychology or the economic cycles, they leave a trace. And that is the technical chart. And if you ignore the history of that, then you're just leaving yourself open to not being able to spot when history is, if not repeating, at least rhyming and having similarities. And there's a reason why these similar patterns happen over and over again. It's the same reason that war breaks out over and over again, and we don't learn from our mistakes. The same human frailties and problems keep recurring on, predictable cyclical patterns. And what you spotted there is pretty, it's a good spot. That, I mean, that is a very good reminder of what is possible. I mean, it's not to say that we're about to enter that type of crash, as you quite rightly said, but it's as well to be aware that is, there's a historic precedent for that happening.
So true.
And you want to know about it because you want to spot it when it's unfolding. Because hell, if something like that comes along next year or the year after, then we're all going to know about it.
That's right. I'd much rather know about it than just be oblivious, because at least you have a chance to potentially protect yourself a little bit.
Well, indeed. I mean, if that happens, I suppose for a time at least, everything goes down. Doesn't matter whether you're in gold miners, silver miners, uranium, commodities, tech, whatever. That type of event is likely to take everything, at least momentarily, down to some ridiculous level.
So true.
Yeah.
So what?
Yeah.
Well, exactly. You read my mind. I was going to ask him. So how does that fit in with Bitcoin?
Yeah. So I mean, in reality, right? I mean, it probably means there's further downside on Bitcoin, but I do think that Bitcoin is, it's getting closer and closer to those lows, and just by mathematics, it is, right. I mean, it was at 69,000, and now you're at 16.6. So there's only a certain amount it can go down, even if it were to go to zero. But I think for me, there still is this intrigue and need for something like Bitcoin. So ultimately, I think it goes to 10,000, 9,000 area. I've likened the FTX fiasco to the Lehman Brothers collapse in terms of the psychological impact on the markets, the S&P 500 back in '08, leading into the '09 bottom. And then same thing here with crypto and the kind of the psychological impact leading into it. And you guys are chart guys and you understand the human emotion of it. So it's kind of like this, when you have this kind of blow up, it creates that despair, that beginning, that kind of that last cycle of fear that markets usually bottom on. So I still think we're going lower. I still think that, again, you still have risk assets that'll be sold off. You don't have transparency, all these things in the crypto market. But I do think that the end is getting closer for a potential bottom. I just don't think I think everyone thinks Bitcoin's going to magically go right back to the all-time highs as soon as it makes a bottom. And realistically, it won't do that. It'll probably take quite a while.
Yeah, that chimes with our own thoughts. I think, you just have to look back historically, and it can take 1 or 2 years of base building before you really start to get the true breakouts. So somewhere around 10,000 as a rough ballpark figure, you think is quite likely?
Yeah, I think nine, in the nines, mainly because
Yeah.
I think there'll be a lot of triggers of stops right at 10 when it breaks 10. Psychologically, that's going to be max pain for a lot of people. And we know that the markets tend to push people to that level. So I think it makes sense that it pierces 10. Where it goes below, maybe 9, 9.5, that's kind of the zone.
Yeah.
Good stuff. Yeah. It's, and a very good point that you made there about, the fact that it takes time to heal all of that damage. So, you may get a nice impressive little bounce up from that 9,000. It could go to 15 and you get a 50%, 60%, 70% move, something like that. But then, goes back down again and close to where close to that 10,000 level, and kind of bouncing around, I think, for a good year or more,
Yeah.
is very likely, isn't it?
Yeah, it'll be interesting to see the next when you have the halving or whatever they call it, where Bitcoin again becomes harder to mine. I think that's in early 2024. Does that have an impact?
Right.
Historically, we've seen that it does have an upside impact, but that's been during money printing, right? If the Fed still isn't printing and we're not seeing printing here, does it create this longer bear market where we kind of just sit around lows or chop around for a long period of time? And again, I'm not sure because we don't have a lot of historical information when the Fed wasn't printing with Bitcoin.
That is an interesting question, isn't it? I mean, the backdrop to Bitcoin has been very bullish since its inception, and now with markets rolling over, stock markets rolling over, big tech rolling over, it kind of paints a very different economic backdrop. And a lot of the Bitcoin maximalists are just completely disregarding that factor. It's dangerous to disregard that. It's dangerous to just expect Bitcoin to repeat what it's done in the past, because it did it in a completely different environment. It's conceivable that Bitcoin really struggles and cryptos really struggle until the stock market, whatever is coming with the stock market, and we've already said that could be 5 years before it starts to make moves to the upside. It could be 10 or 15 before we get back to those previous highs. So much the same could happen with crypto. We just don't know, do we?
No, definitely don't.
Some stuff never comes back. Look at cannabis. Remember cannabis? You pop up CGC, the Canopy. Look, these companies are more mature now. The fundamentals are probably better. They have employees who've been running in business, but the charts, some stuff never recuperate. Look at that.
Yeah.
Like some stuff never comes back, guys.
No.
it's just so that's why the lesson as chart traders, and I'm super happy that Gareth, you're trying to not popularize, but sensitive to render mass awareness of chart trading, because no matter how bullish it looks, I remember Canopy Growth, they peaked when it got legalized in Canada. The day it was legalized in 2017, that was a top.
Yeah.
It's like the market discounts, but only the chart's going to show you that, I remember everybody was asking me, oh, should I get into cannabis stocks? But they were asking me too late. So look,
That's
yeah,
always the
guys.
signal, right? When retail crowd is coming to you and saying, "Hey, should I do this?" It's like, no, it's too late at this point when that's
I
happening.
know. So does that scare you? Let's say some of your friends, they know you're a chart trader and they come, Gareth, let's get into oil. Do you take a step back and say, oh man, maybe we're topping?
Oh yeah. No, there's no doubt about it. Is that when people mention things, and what I use is I actually use Twitter as a great place to kind of gauge sentiment. And so if I post an idea, like a good example was when Bitcoin was topping, and I was saying, oh, it's going to go to 20,000 or below. The amount of kind of pushback I got was incredible, and that actually reinforced my feelings that it would actually happen. Same thing with oil at $130. I would post up, no, guys, I think the chart's telling me it's going down. And people, oh, you're crazy, it's going to $200, you don't know what you're talking about. I'm like, all right, now I'm probably going to be right, like, so. And it's just, again, this is all human psychology. It has nothing to do with the fact that that's just the makeup of the general public, is that they're going to go with what the common thought process is. And in general, when everyone feels that way, it's not going to be that way.
It's another way of putting it is normalcy bias, because if you get into that kind of regime where prices are going up and up and up, as they have done with the stock market for many years, effectively, people get into that mindset, and it's normalcy bias. They just expect the same thing to continue happening. And when the signs are there that trend is changing, there's a real reluctance for people to quickly accept that, and it's a strange thing. I've never quite figured out why people seem to just discount the possibility of a complete trend change. It's an odd thing.
Yeah, it is fascinating to kind of watch that play out in real time and just understand the psychological. I mean, as you get more advanced in trading, you start to look at these charts and understand the psychological impact, and then you can kind of see it in your actual everyday life, right? How you're starting to meet people who are saying, "Oh, should I buy Bitcoin at the highs?" and all that type of stuff, and it does become a red flag.
And you know what I've heard very few people talking about recently is gold and silver miners. And you take one look at a ratio chart of the gold miners to the SPX, for example, or ASA to SPX, which is one of the precious metal funds. You can understand why. They are so historically beaten down at the moment. The miners in relation to, as I say, for example, the stock market, or even in relation to the metal itself. It's not surprising that nobody wants to touch them with a 10-foot barge pole at the moment. But that is exactly the time when I start, and I'm sure, and any chart trader who knows what they're looking at on the charts, that's when you start to get a little bit interested. What are your thoughts on the miners at the moment?
Yeah, I do like the miners quite a bit. And one of the things I like about the miners is, number one, you definitely have the potential for a bottom here. We actually came into this nice little resistance. You can see these lows over here, and that's exactly where we stopped. But I would say you look for a pullback in the 25.70 range right in here. That's a really good opportunity, I would say, to get long the miners. And I'm with you. I think, you have people that are saying, oh, gold is old news, no one wants to invest in gold. That's exactly when you want to invest in gold and gold miners. And the fact that inflation is coming down, one of the reasons why the miners underperformed so greatly is that gold price wasn't going up, but their inflation, their costs, the input costs, whether it's the people that they were paying to mine, the equipment, all these other factors were going up. So it was really hurting their profitability. Well, if inflation is really coming back, let's say to 3% or 4%, and if gold can actually outperform that, then they become in this sweet spot where they can make a lot of money, right? Let's say gold goes up, 10% or 20% in the next 12 months, but inflation's only 4%, then they're really, really doing well. So I think that's the bull case for the miners. The charts obviously look to potentially be confirming that. And I do continue to like the miners. I mean, if you zoom out on this chart, and we can get rid of this trend line here and this one here, I mean, essentially you still have this inside bar consolidation, right? So even considering how strong the dollar's gotten, you could make a case you have that there, and then also kind of the same general thing here. I mean, almost a parallel you could make a case for of inside movement from this move up. So I do like it. I think, again, the miners make a lot of sense, and gold as a whole makes a lot of sense.
Yeah, it's interesting to see that one of the ratio charts that Pat and I are watching very closely is the gold to SPX ratio. And that really is one that has reliably signaled, this kind of gives the go signal for a long, strong precious metals bull market. And I don't know if you looked at this, but, it's our view that if gold can get to the point where it's worth 50% of the SPX. So, for example, SPX 4,000, gold 2,000, SPX 3,800, gold 1,900, that kind of thing. When you get to that ratio of 0.5, that is pretty significant, and it's likely to be at that point that the precious metals bull market is a high probability in terms of having high confidence that we are finally about to do something meaningful. I don't know if have you looked at that particular ratio very much?
I haven't, but it makes a whole lot of sense. And it definitely is something that I think you got to pay attention to. So especially looking historically at when you get these bull moves, like looking at silver, for instance, we know that I think it was in 2008, you had that incredible silver run going back here. Let me bring that up over here. Yeah. So you've had a couple major epic spikes in silver, and same thing going back, I guess it was in 09, late 08 into 2011, just a meteoric move in silver. But it does seem like we're kind of getting towards that point. Same kind of thing on silver, as you have this upside move and this kind of inside bar consolidation. And obviously you have a lot of resistance here, but if you can get through this area here, there's a lot of upside on silver as well.
Yeah, that's what you've identified there, 26, 27, 28. As soon as we're above that, there's like a vacuum all the way back to all-time highs.
Yep.
So people got to be patient. It's people always want to jump the gun. Patrick, is it time? You must get that all the time. Gareth, can I buy? And I always tell them, wait. I'm super boring there. But
I know people want action, right? They want action.
Yeah, they want stock picks, right?
Rocket ships ready to go on his charts just at a moment's notice.
Yep.
That was fun. Well, look, Gareth, super appreciate the market update. I think our viewers are going to super appreciate your thoughts on gold, silver, Bitcoin, the stock market. Everybody wants reassurance, and I think you identified the levels people should keep an eye on.
Thank you so much. Yeah, it's great to talk to you guys. I always love talking to chart guys, so this is great.
Yeah. Well, yeah, it was an honor and a pleasure to have you on. Gareth, you want to mention any of the social stuff you want people to where they could hook up with you?
Yeah, just follow me on Twitter. I would say at Gareth Soloway on Twitter, just my first and last name, and I put lots of interesting tidbits up there for people to check out.
Awesome,
good stuff, Gareth. Really appreciate it.
Thank you.
All right, thanks for your time, man.
Till next time. Cheers, guys.
Bye, Gareth.